Welcome. This is Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. I'm Merlin Rothfeld with you for your Tuesday afternoon edition. I'm all alone in studio today. I had a guest kind of lined up, but he couldn't make it. Busy in New York City today. So we'll do the show alone, which is good. I got a bunch of questions. So Ullman, Heath, Sarah, and Alan, I got a bunch of your questions. Also Damien. Hopefully I'll get to all those as we progress. And Nick, I've got an old question that I have not been able to get to. So I'll address those on today's show. If you have questions, feel free to send them on in at powertradingradio.com. You can click the button there that says Power Blast to get those to us here. You can also join our viewers out on YouTube. We've got Power Trading Radio's YouTube channel going and Online Trading Academy's YouTube channel. So say hello to everybody out there, start some discussions, and hopefully we'll get some interaction out of you guys today. All right, let's start things off with our top 7 markets out there, moving from bottom to the top. Worst performer, gold. And it doesn't even look that bad, to be honest, but you look at the chart, and it was a little bit of a red candle today. Gold was your worst performer, as I mentioned, down over 0.5%, 0.53% to be precise. As we zoom in here, you guys can see a little bit better picture. Really, for the past, well, I don't know, since, what's our date on that one, TJ, on this daily? Going back into January, really just been sideways. We had a couple extended down days. Other than that, it's just been a lot of chop, little stuff, so no big deal out there from a technical perspective. But that's your number 7 performer, and the only one of our top 7 today that's negative. All right, from there, we move to the NASDAQ 100. I was actually surprised by this. Let's look at the NQ. You had some numbers that weren't that great today, from not numbers, but just some movement from Microsoft. Who was the other one? I want to say Google, maybe Amazon or Apple, or maybe it's Apple. And not looking so good today. It did give back a lot of its gains. You notice we have a great shooting star formation. Some actually would call this a gravestone doji, which is, it's close. It's not quite a gravestone doji. I understand that. But today's candle on the NASDAQ 100 is actually a very bearish candle. Again, you have to wait and see how that transpires tomorrow. Maybe later on, time permitting, I'll draw some lines there and we can wrap a trade plan around that bad boy. But right now, on the day, it was just barely positive, up 0.11% on the day for the NASDAQ 100. Again, dragged down by Apple and by Microsoft today, which are both down. All right, that brought the NASDAQ Composite 9,638 to wrap up your 6th place. Going to 5th place with the S&P 500. Here is your ES. You notice a similar picture, although it did not end as weak on the session. Still had a small little green body there. So all in all, from an intraday perspective, this is a good day trading type of day. You had that open, a nice rally for most of the session, and then all of a sudden teetering near the end and giving it back, almost all of it back for the ES. Today, the S&P 500 finishing up 0.17%, so just eking out the NASDAQ for the 5th place spot. 3,357 is where we're at. And yes, if you're playing along at home, that's an all-time intraday high, all-time closing high, just all-time highs. Just keep on going. Keep going, S&P. Keep going. All right, next, Russell 2000 would be your 4th place finisher. Russell 2000, much better than the S&P and the NASDAQ today, up 0.59%. I believe that's coming off the heels of a very nice NFIB Small Business Index report, which I'll run through for you guys today, and you'll see some graphics here on what that means. Russell 2000 finishing at 1,677.51. It is right there in the after-hours session. Again, that's a gain of 0.59%. From a technical perspective, I did get comments and questions about, does the supply level still hold here that it rallied up into today, and is that the reason why it sold off? I don't believe so. I believe that's just more of a knee-jerk reaction to the overall market. For me, that supply zone that you guys are identifying at 1680, call it 1685, to me that's exhausted. That one's chewed up. That's no longer valid, in my opinion. If it is there, it's very, very weak because we saw this sell-off that happened last week because of it, and all of a sudden we're rallying back up. So I wouldn't attribute today's coming off the highs on the Russell to that supply zone, but some people like to come up with not excuses, but thoughts on why that is. All right, that was, what was that, TJ? That was Russell at number 4. Number 3, we go to the commodity side of things with crude oil. I have a few questions that came in about crude oil today. Notice that chart right there. Kind of interesting from a technical perspective, and all of a sudden it sounds like people want to know more about that specific formation. Crude oil on the day, up 0.77%. $49.95 is where it closed at, which is where it's at right now. It's actually in between the bid and the ask on there, as you can see on the click platform. That's a gain of 38 cents per barrel, which put it into the podium spot with a bronze medal. Moving on to Treasuries, the ZN futures. This is the 10-year Treasury note futures product. The yield today moved up 2.78%, almost capturing your top spot. That brought the yield to 1.59. As you can see, a slight pull down here in the price of those 10-year Treasury note futures. Nothing overly noteworthy with regards to the price action, but hey, we got to know where the 10-year's at. Yes, Dunkster says Mr. Russell was strong today. I'll show you why here in just a sec. Final one on our list. Bitcoin, 3.93% move to the upside. And you can see really for the past few hours, it's been slowly drifting down. But boy, was there a big surge on Bitcoin early this morning. Now you can look at the exact time there. Right around, 7 in the morning? Yeah, you had a nice spike up there in Bitcoin. Brought it over the 10,000 level. So this is a nice milestone. If we hold 10,000, I think you're looking at some optimism for the entire crypto space, especially Bitcoin. But that was number one, up 3.93% in the last 24 hours. That's $386 per Bitcoin to 10,222. Not too shabby. All right. You guys have all kinds of good comments coming through here. Big Eb says both Apple and Microsoft are overvalued and due for a drop, among others. Yeah, I think a lot of it has just moved too far too fast. I guess when you look at, this is the tough part about making those sort of statements, Big Eb, and while I agree with you on Apple and Microsoft, especially Microsoft, a large part of what that valuation is priced off of is the expectations going forward. Does the Microsoft Azure product take over or compete with the Amazon product and things like that? That's all speculative at this point. Unfortunately, I don't know the answers to those, but that's what a lot of these valuations are based on, and we'll have to wait. Time will tell. I do think it's moved a little bit too far too fast, and it would not surprise me at all to see a healthy correction. I think we're just getting a bit long in the tooth, but I've been saying that for a while. We've had a couple nice corrections along the way, which have been nice and profitable, but we still tend to make all-time highs. So that's the grand scheme of things. Let's go to there's so many different questions today. I'm going to go to, I guess since I don't have a guest, I don't need to take a break exactly on the break time. So I'm going to go back to the Russell 2000. Now, you look at it today, it was one of the better performers for today. Now, when we look at it lined up next to the S&P, the NASDAQ, the Dow, the Russell isn't as strong, right? It's not making all-time highs, although it's very near. It's struggling with this most recent peak that it's put in, which goes back a few weeks. We can potentially break that. But why was it the big leader out there today? I think a lot of it has to do with the NFIB Small Business Index report. Now, of course, these reports come out all the time. This is a monthly report that comes out. Let's see. Brendan says, Merlin, waiting for this damn correction has cost me big time. Yeah, it's cost me a bit too as well. It's all right. I'll be fine with that one. I wanted to bring up the chart. TG, you brought up, there you go. Bring up that one. Boop. There you go. This is the NFIB Small Business Index, guys. It's a pretty important one if you're looking at small cap stocks. I'm trying to do multiple things here. What are we trying to do, TJ? You're all over the place. There we go. That's the screen I wanted. Basically what this is, it's independent for-profit enterprises that employ between 100 and 250 people, okay? But that doesn't include the owners. So these are very small companies. Of course, many of the companies within the IWM or the Russell 2000 are in fact small cap companies. So what they're basically doing is they're doing a survey of those businesses, asking the respondents the rate of relative level of economic conditions. That means labor markets, inventories, sales, capital spending, inflation, earnings, wages, and even credit markets. So it's really asking those business participants how they feel about markets going forward. As you can see here, it's been looking really good, right? We're up at 104.3 right now. That's a number that came out today. It was actually expected to be 103.6, and it previously was 102.7. So we saw a nice jump up in that business index or small business index. What I wanted to do, just so you guys can see the relationship here, I had TJ bring on a chart here. So TJ, bring on the actual S&P 500, or not S&P 500, this is the Russell 2000. So bring on the Russell 2000. Here he goes. So you guys can see the Russell 2000 just popped up on that chart with the black line. Why is this important? Well, I think you guys can all see there's a pretty tight correlation between this. And I think this was a topic of discussion yesterday with Peter Valley, where we're looking at the relationships between different instruments and how we use that to find signs of strength or weakness. Well, if you are a Russell 2000 trader, the NFIB Small Business Index is probably fairly important for you. One thing I've noticed here, at least on the right-hand side, so I'm going to have TJ move his cursor so you guys can see over here on the right-hand side of the screen. If you go back to when we bottomed out in December of 2018, right? We had that ugly sell-off from, let's call it September to December. It was a pretty aggressive one. You see the big sharp here in the NFIB Small Business Index numbers, totally correlated to the Russell 2000, which is the black line. Now what's happened? You're seeing an extension, right? You're seeing that the prices of the Russell 2000, which is the black line, are really extending above where these NFIB small business index numbers final results are coming out at. So for me, there's this concept of elasticity. And the further that you see something extend away from its median or its average, in this case I'm using the NFIB small business index numbers, the further that this Russell 2000 extends above that, to me the more likely it's going to snap back down towards it, to kind of a reversion to the mean, if you will. Now, this isn't exactly exact science, but I think you guys can see there's been a couple times where it has extended itself and it has pulled back. There have been a couple times where, of course, you see the NFIB small business index numbers catch up to it. But right now, that's what we want to know. Hard right edge, what's it doing right now? We're a little extended on that Russell 2000, so it might be an interesting thing to keep an eye on, as it has been the weaker of our top 4 major market indexes. While it's still trending up with that NFIB small business data, it is not moving up at the pace that the actual index is, and that may be problematic for the Russell 2000 going forward. Just something I wanted to show you guys. I like when I'm reciting some of the data and giving some of these facts and figures to you, why not see it with the actual market that is impacted by that piece of economic data? So there you go. Wanted to show you that, guys. That one to start our opening segment. When we come back, I've got a whole bunch of stuff. I have some psychology questions. I've got crude oil. Heath wants to know about Sprint. I'll go into this Sprint trade here a little bit later on. Also want to go and make sure we look at crude oil, which has been a really popular topic since yesterday's show. So if you guys have questions you want me to answer on the show, on some market analysis, some charts, let me know what it is. Send it on in at powertradingradio.com. Click the little button there that says Power Blast, or go to our YouTube channels. You can join right now on both Online Trading Academy as well as Power Trading Radio's YouTube channel. Lots of discussion going on there. So say hello, ask a question. We'll be right back after a short break.
What if you knew the income strategies professional investors used? The strategies designed to generate active income from the financial markets. After all, no one's going to care more about your money than you.
I learned that I can be in control of my 401k.
I used to work for money, now I have my money working for me.
With the right training and guidance, you can learn the skills to become a more confident investor and make your money work harder for you. Want to find out what's possible for you? You can, as long as you're willing to take the first step and call OTA today.
Call for your free tickets right now, and you'll also receive a free Professional Insiders kit loaded with lessons from some of our top instructors on topics like enhancing your retirement strategy, capital preservation, and income generation. The Professionals Insider Kit makes it so you can get started right now.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today.
Click is something I wish I had when I started because it facilitates the learning process a lot quicker.
This is not about taking many trades, it's about taking the right trade.
It helps me save myself from myself. It's just a revolutionary educational tool. It just propels you through the learning curve.
The biggest shock for me is the level of innovation that happens within the company, and it's continuing.
Is just perfect in this new century of trading.
Everyone's on the same side, and I think that's what I love about it more than anything else. Helping each other, supporting each other, all with the same objective. Again, wonderful.
There's no mountain high enough that the leaders in this organization won't climb for their students. They'll just never give up.
It can only help. It can only make one a better trader.
Gives you one of the most valuable things we all have, and that's time.
Welcome back to Power Trading Radio Live with your host, Merlin Rothfeld, and today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothfeld with you for your Tuesday afternoon edition. It's Taco Tuesday. I need to have tacos served to me here in studio for that day. Let's see. A lot of great comments going on in our chat. So for those of you who ever listen to the podcast on iTunes, we love that you support us on iTunes. But you might want to check out the live streams we do on YouTube because you get the full interaction. You can see the charts as well, which sometimes becomes a bit challenging. Sometimes I forget to do the theater of the mind, remembering that there's people just listening to the podcast. I'll do my best to draw those pictures for you on the chart. Real quick, I want to go to a couple comments, or really good ones here. Mountain Markets Power Trading Radio's YouTube channel says, thanks for the tip last week on controlling risk. Something clicked last week, and I've been keeping 3 tick stops, which has made me more selective, and green on the screen for the last 4 sessions. Green on the screen for 4 sessions in a row? Love that. Keep it going. I'm kind of curious, though, why you chose 3 ticks. There was also a question coming in from Heath, says, what's a 3-tick stop? A tick is generally the minimum increment that a futures contract will move in. So it's basically talking about 3 different levels of price, if you will. Now, what's great about that, and we talk about this in all our classes on the Trading Academy, is the most important thing that you can do to be successful in these markets is not lose money. Protect yourself. Make sure you use stop losses. All it takes is one bad trade to erase everything that you've gained for months or even years. I've seen people blow their accounts over and over again, so make sure you use stops. My only question for you, Mountain Markets, is why'd you choose 3 ticks? Depending on the style of trader you are or the instrument that you're trading, 3 ticks is very tight. Obviously, there are tools that we use in the classroom which will tell you what might be a more appropriate stop loss size. To me, 3 ticks is a little bit tight. You're not giving that security a lot of wiggle room. The good news is, if you are wrong, are you losing much? You're losing 3 ticks, so who cares, right? But if you do the analysis down the road and you find, you know what, I'm getting stopped out a lot, you might want to do a little bit of study into what might be a more appropriate stop loss for that individual security. For example, if you're trading the Dow Jones or the Dow Jones futures contract versus, let's say, crude oil, you're going to have to use different stops. 3 ticks is not the same for those 2 asset classes out there. So while I love that you're implementing discipline and risk management, which is paramount to success in this, I'm just curious why 3 ticks. So great comments out there. Let's see. He says, Merlin, I started listening to your show over a year ago. It's what made me join OTA. Love the show. Cool. I hope you love the show, and I hope you love the training that you got as well. All right. Where was I going to go with this show today? I'm all over the place. We looked at a stock yesterday. What the heck was the name of that stock? Oh, TJ probably remembers this one. We were looking at a security that was just trending down and down and down and looked like just death warned over, and I cannot remember the name of it for the life of me. I'm going to actually save this question then until I can remember that. Maybe I'll ask TJ on the break. Let's talk about crude oil. Why not crude oil? Ullman says, yesterday you were talking about crude oil. What were you looking for to go long? Well, there's a couple different things here. Number one, first and foremost, am a huge fan of understanding supply and demand, understanding where those turning points might be. Now, I want to do a little bit of theater of the mind here. It's going to require me to do some work on the screen. You guys see that there's this blue line here on the chart, this horizontal blue line that TJ will bring up full screen for you guys here in just a second. If you look at it from this point right here, go back one more, TJ, there you go, right there. Okay, you guys can see that there is a reason why, if you split down this to a smaller time frame, why back in January of 2019 that there was a demand level there. And we were looking at that saying, you know what, it's coming down to it, that might be a point where it bounces. It did bounce. Now, I actually thought that it would bounce much higher than this. It has a small bounce. I was anticipating it jumping higher, but I did not make that trade. I was busy with other obligations. So what happens is you start to see it come back down, and here's where we are as of today, right? That's where we are right now. Oh, thank you very much, Dunkster. It was rigged. Yes, I love you guys. You're awesome. I could not remember it. I got so many stocks in my head. Dunkster, you're great. I'll bring that one up in just a second. If you look at this chart formation right now, yes, you do have this demand level that goes all the way back to January of 2019, but early 2019. What I want you to notice is what's forming right now. Now, this is not the strongest level by any means, by any stretch of the imagination. However, I received about 4 messages last night. This is technically a double bottom, right? I know it's a little bit abstract, but you had price come down here. You see this aggressive sell-off that started on January 8th of 2020. It started to sell off. It's going down, going down, going down. And we bottomed out here. Of course, we say in hindsight that we bottomed out on the 4th of February. It only rallied for 2 days before coming right back down. And here we were yesterday at the same point on February 10th. Today, we had a little bit of change. So the question is, how do you trade this? And going back to Oman's question, he says, what were you looking for to go long? I'll tell you, it's going to take a little bit of price movement. I'm going to be a little bit stingy on this one, and I may actually, depending on how it works in the overnight session, jump on this one early. What I would be doing is I would be looking at this lower line right here, and this is just how I'm going to be mapping out this trade. You see this kind of horizontal range right here. And since we have Click, I can actually use some better tools than this. We'll use the zone drawing tool for Click, and I will do my best to... There we go. So there essentially is a zone that I'm interested in looking for, okay? And I will we may as well take off the volume. It's just kind of blocking the chart a little bit. There you go. Thanks, CJ. So right now you've got the zone between, let's call it 49, 31, and 51 bucks even, right? We could tighten that down a little bit, right? There's a level that's just a little bit lower than that, which is going to be right around like 57.75 or 50.75. So what I would be looking for is if it breaks out above that, I might start buying into this. If it breaks above this next line, which is going to be up here right around 52.25, then I'd be looking to add to my position, thinking that we might have reversed. See, the thing about double bottoms is you don't know that it's necessarily reversed. Right now, if we were to take all these lines off this chart and just ask what's your opinion of it, most people are going to say, hey, look, it's in a downtrend. It has not made a higher high. However, it has based. It has made 2 attempts at this level, right around 49.50. So to me, that's what I'm looking for. Oman and others are looking at crude oil. I actually am feeling a bit optimistic here with crude oil. I'm going to kind of wait and see what happens in the after-hour session and tomorrow. Maybe by the showtime tomorrow, I will have put on a trade on crude oil. I will let you know if I do and at what price. But that's kind of what I'm looking for. At this point, it's still risky because that trend has been pretty aggressive to the downside. However, if you're using that low we achieved last week, some could make the argument that that is the new demand zone. It's not that strong, to be honest. I don't think it's a great demand zone, the one that we're in literally at this exact moment right now. But what if it is, right? This could be the beginning, and I say could. You have to use your own discipline and risk management on this one. But it could, hypothetically, be the beginning of the next rally to the upside for crude oil, which takes crude oil to where? 50, 60, 70, 80? I don't know. I actually thought we'd be nearing that $70 mark this year with crude oil. And if you look at this daily chart here, 70 wasn't that far away. Right, here's your daily, 70, go put a line up right at 70, TJ. I need a horizontal line there. Where's the 70 mark, right? 70 is not that unreasonable of a target, especially when you consider that just about a month ago, we were at 65 bucks, and right now we're at 50. That's a pretty aggressive sell-off there with crude oil, so I'm feeling optimistic on crude oil. I know it seems odd, especially because we're in such an aggressive downtrend. If you are making this play, there's one thing that you have to be ready for, and it's not making money. So let me repeat that. You have to be ready for something here, and it's not making money. What you have to be ready for is a loss. So if you go long on crude oil futures, on USO or CL, make sure you put a stop loss in it, because if it breaks this low, where is it going to go? It's going to go down to something much lower. And if you look at this chart over here off to the left, you're looking at what, 46? That's a $3 drop on a crude oil futures contract. If you're not, you could lose a ton of money there. So I'd be very careful. If it does break, just get out, lick your wounds, and move on. But I personally think that it's probably worth the chance right now. I'd wait and see what happens in our after-hour session. So the next few hours will be telling for this one here on crude oil. Hopefully I answered all those questions out there. Let's see if I got some feedback from you guys. You guys are talking S&P. Trenton's already in oil. Exploration is in a few days. Our expiration is in a few days. Yes, that is true as well. Let me see on our Online Trading Academy YouTube page. Hello, everybody out there. I see we've got... Sir, is there any staff member of yours by the name of Michael Griffin? Please reply me. No staff member here named Michael Griffin on Power Trading Radio. But thanks for asking. And hello, Fete, Abby, Javid, Dana, Sabrina, and Gayer, and of course all our very active groups over on the Online Trading or Power Trading Radio YouTube channel as well. All right, let's do this. Let's take a quick break. I want to come back. I want to look at rig and show you why that is very similar to what we saw happen with Sprint today. Of course, rig didn't move up 80% today like Sprint, but we'll look at those charts. If you have questions, send them on in at powertradingradio.com or our YouTube channels under Power Trading Radio and Online Trading Academy. We'll be right back after a short break.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today. You're listening to Power Trading Radio Live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.
Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothfeld with you on your Tuesday afternoon. Thank you guys for the fanfare and the love. It's actually pretty awesome. I heard a couple nice comments in there. Brendan says, if I had known about Merlin, I would have signed up for OTA with much less hesitation. Oh, thank you very much. And Heath says, I found the show on Android's podcast. I didn't even know Android had like a podcast station. It's been my daily drive show ever since. Well, thank you, Heath. Appreciate that as well. One of the things that I think many have found here is I don't have an agenda on this show other than covering the markets and instilling a little bit of Online Trading Academy's flavor in our methodology, without, of course, going into the education itself, but sprinkling that on there and just giving kind of unbiased, of course, sometimes my opinions are biased, I will say, view of these markets. I'm not influenced by anybody. I'm not paid by any sponsors or other than the Online Trading Academy who pays for the show, but I don't have anybody pressuring me to give positive recommendations or feedback on any ticker symbols or any futures markets or anything. So I'm going to give you my honest traders-based opinion of it, and hopefully you enjoy that. What I would encourage you to do, though, for all of you, whether you're on the Android podcast, iTunes podcast, YouTube channels, you can steer the show. Many people have realized this, and they go, you know what, I want to know more about this topic. And they say, answer these questions. And they'll send it in. You can send those in 24 hours a day, 7 days a week at powertradingradio.com by clicking that Power Blast button. Send in your questions, and the more time you give me, the more time I can dig deep and do some research, bring some analytics, have TJ and his team bring up a bunch of reference materials to show better the concepts that you might want to learn. Also, you can go to our live streams, which are broadcasting under Online Trading Academy's YouTube page, as well as Power Trading Radio's YouTube page. All right, so Dunkster helped me out there with rig. So TJ, bring up the old rig. The big rig chart. Transocean Energy, we had a question yesterday or day before yesterday asking about rig, saying, hey, would you buy this one for the long term knowing that it's going to go back up to some of its highs that it's seen recently? And I said, no, I would not be doing that because I don't know where rig is going to go. Right now, it looks like it's in trouble. Now, granted, it's had a nice little spike up, but it still looks rather weak, right? And if we look at this on a longer term time frame, I'll go monthly, rig looks like a sunken ship right now. I mean, we all look at this and say, oh, it's got to go back up to its 150. No, it does not. It may never see the light of day again. I don't know enough about rig to say. I'm a technical person, and that trend right there says do not buy it. Of course, here's the thing. When you buy a company like this, you buy a stock, there's always that needle in the haystack chance, especially if you're in the know and you're watching this company, that they get bought out. So who knows, maybe some other company comes in, buys them, and they jump up to $8, $10, $20, $30 a share. That is the case for Sprint today. Of course, Sprint doing a deal with T-Mobile. And if you're holding Sprint, and this is the question that came in from, who sent this one in, TJ? This is Heath. If one was long Sprint, how would you trade today's move? Well, first off, I'd throw a huge friggin' party because Sprint just went gangbusters today. This is a monthly. Let's look at it on a daily to really just, I would throw a massive party. I would unload my shares and party like it's 1999 because as of close yesterday, Sprint was trading at about $4.80. As of close today, it's at $8.52. You're looking at a 77, almost 80% gain in Sprint in 24 hours. Of course, that's what happens when you do a merger type deal. This is a very big one. Of course, I believe it was it Deutsche Telekom? There was another that they merged with, my memory serves me correctly, it was Deutsche Telekom that owned like 60% of the shares, which vaulted this one. So what do? You get out. This was a gift horse. You basically got lucky. If you asked me yesterday, if you were to ask me, and I would TJ, yeah, do it, buddy. Do it, TJ. Hide that chart. If you asked me right here, said, Merlin, what do you think about going long Sprint? What do you think my answer would have been? I don't think you should go long Sprint. Why? Look at the trend. It has done nothing since July of 2019 but go down. Lower highs, lower lows. You make the argument that maybe the last couple of days it was rallying up, but it's coming right into an area of supply. So if anything, you'd be wanting to short it. However, no one's going to short a $4 stock unless you're one of these internet penny stock peddlers that's just gambling and trying to sell people on your stock picks, which are usually wrong. So you wouldn't short a $5 stock. So what would you do? You'd be waiting to buy this one. And until it made some highs and proved to you that it was out of its downtrend, you would have left it alone. So Heath, If you were long this one, congrats, but in my opinion or my assumption, you were probably holding this from some price. You've been holding this thing for weeks, if not months, as it's been sinking here. And today, you got the gift horse of a lifetime. So I would close out this position, be happy with it. Yes, could it go higher? Probably. It might, but who knows? You know, you just had an 80% gain overnight. Run with it. Go and have a party tonight. All right. Deutsche Telekom, yeah, owned much of it. Yep, I think it was over 60% of the stock. So anyway, that's the basic there. So there you go, Heath. Let's go to Sarah in San Francisco. Says yesterday we were talking about comparing markets in one chart. Can you go over that again? Please show us how to create those charts as well. Okay. One of the things that is critical in analysis of financial markets, obviously we're doing everything that we can to put probability in our sides. And what that means is, if we're looking to add positions to, like, say, a long-term portfolio, if I'm looking to add positions to a long-term portfolio, I want to make sure I'm adding the strong ones and avoiding the weak ones. There is an argument to be made that, well, I want to buy the weak ones because they have more room to go up if they go up. They're weak for a reason. So if the market's trending up, you want to buy the strongest ones and ride those lead dogs, right? If you're in the Iditarod sled dog race, you don't want to have the weak dog in your pack because he's going to slow everything down. So put the strong ones in. But sometimes you don't know how to do that analysis. So I was showing you yesterday a thing called perf charts or performance charts, or basically a comparison chart. A lot of platforms have it. We're actually just about to, it'll be one in an upcoming release on Click. It's not there yet, where you can overlay like 5 or 6 or 7 different things. So as an example for you, Sarah, and others out there that might be interested in this, you can do it with anything, right? If you want to compare oil to soybeans to gold, do it. Right? It all depends on what you're looking to analyze. So what I wanted to do as an example, I thought it might be fun to take a look at, let's say, 7 or 8 market segments within the S&P 500. And it's going to be a little bit messy here, but I want to walk you through as we do this. So what would you do? TJ, bring it up full screen so we can show our friends at home how to do this. If you go to something like stockcharts.com, we have no affiliation, guys. This is just one free site. I'm sure there are tons of them out there right now. Let's go to the very top. You'll see it says snap chart or sharp chart. Just go here and just click perf chart. And what you want to do is you want to type in the symbols that you would like to analyze. So, excuse me, guys, I got this cough. It's been driving me nuts. I apologize if I coughed in your ear. What you want to do is just start typing in the symbol. So I'm going to add in technologies, which is XLK, would be the ETF for that one. I'm going to add in utilities, which is XLU. I'm going to add in financials. You might want to see what the banks are doing. That's XLF. Let's go to energy, right? Want to see what energy is doing, so we'll go XLE. Oops, XLE. Next, we want to add in industrials. Always nice to see what's going on the industrial side of things, so that's XLI. We want basic materials, which can be XLB. We'll add in XLV for healthcare. And lastly, consumer staples. Great for market recessions because everyone's going to use toilet paper and toothbrushes. So let's put an XLS. Now, once I have those, how many are there, TJ? 1, 2, 3, 4, 5, 6, 7, 8. There's 8 there, although I think one of them is wrong. You put an F. So we got 8 market segments within the S&P 500. I click on Go, and now all of a sudden, I have all of them on top of each other. And I can start to do an analysis of which one's the strongest. Now, here's where it gets interesting. How far back do I want to go? So if I want to look and see who's been the strongest since the beginning of the year, well, it doesn't give me a lot of data to work with. That's like, what, 30 days? Less than that? Here's 24 days. So since the beginning of the year, you can see utilities has been the strongest. Interesting, because utilities usually perform better as markets are crashing. Just something to food for thought. You know, just want you to check that one out. What's the weakest one out here? I'm guessing that this is industrials. Energy. Energy's been extremely weak. But what if we went all the way back into 2018? So this is important for different forms of analysis because maybe you are a long-term investor and want to add stuff to your portfolio. Well, if we go back to the last 293 days, you can see that clearly technology is just the behemoth out there. Up 40, it's got to get more than that. Yeah, it's going to be way more than that. It's funny. It says on the right-hand margin it's up over 55. Looks like 55%. Oh, there we go. That's what I'm doing. Yeah, 55%. The weakest one out here is still energy. So, you know, if you're looking for a position to add to your portfolio, I don't think energy would be the one to do right now. It's been really weak and underperforming. I know you're buying into something that's a little bit long in the tooth with technology, but that's why we have stop losses and risk management, is to protect ourselves should this juggernaut right now, which is technology and NASDAQ, continue to move forward. So that's how you do it. Who is that for? That was Sarah out in San Francisco, my NorCal friends. I'm from the NorCal as well. So that's how you would do it. And again, we can do this with anything. If you're looking at, let's say, 2 different mutual funds for your 401k, or you're looking for 2 different commodities, you can put in different things here and analyze their performance over a specific period of time. Sometimes it's interesting to see how well they perform or underperform an overall market. What I didn't do here, let's add in one more, TJ. I want you to add in SPY, because these are all components of the S&P 500. Let's see how it looks with the SPY, which is going to be this line right here. So S&P right now, down. There you go. S&P 500 is up about 15.73% since the last 200 days, and now you get a reference point in using the S&P to see which ones are underperforming the market and which ones are overperforming. So very simple, easy thing that we can do to now analyze these markets. There you go. Dunkster, where are you from in NorCal? I'm from Petaluma. All right, we got P-Town, baby. All right. Last one here. I'll read this one from Alan just to go into. It's a little bit of psychology. Alan out in Dallas says, Merlin, I've really struggled with taking losses. I always tell myself another tick, another 5 ticks. And the next thing you know, I'm down 30 or 40 ticks. Did you struggle with this, and how did you fix it? Yes, I think everybody struggles with this. This is why I'm so adamant about making sure that you write down your trade. I want your entry, your stop loss, and your price target. When you write down your stop loss, that's gospel. You stick to it. You don't change it for any reason. There's this ingrained nature in us to not take a loss. Nobody wants to lose. It's part of our game, and you have to accept that. So when you map out a trade and you say, okay, I've got a 20-tick target, and I've got a 5-tick stop loss, great, you got a 4-to-1 trade. I know you don't want to lose at that 5-tick stop, but you have to. Because what happens if that 5-tick turns into, as you mentioned, 30 or 40 ticks? Not only does it destroy your ego, it could destroy your trading account and potentially ruin your trading or investing career. So how do you fix it? You just stick to your number. Just pull the trigger. You do the analysis. You make sure that where you put your stop loss isn't just an arbitrary 2 ticks or 5 ticks or 3 ticks. There's logic behind it. You want to incorporate that into supply and demand zones, making sure that it's below, if your stop loss is there, it's going to be below a point where price has had difficulty going below, or price had difficulty going above. And there's all strategic ways we look at that with odds enhancers to find out which demand zone or supply zones are the best for that specific situation. So that's how you do it, Alan. It's the simplest answer I could give you, is just set a stop loss and stick to it. That stop loss should definitely be something from a monetary perspective that if you lose that amount of capital, it's not going to hurt you, that you're not going to start throwing chairs around your studio. On the old trading floor back in the late 90s, we had this game called Scrabble. Yes, many of you are thinking Scrabble, oh, the little one where you spell the words and get points. No, Scrabble for us was where we'd take a keyboard, we had a really bad trade, and you start smashing it on your table, your monitor, on the walls, just destroying it, and the keys were flying everywhere. That's what Scrabble was on the old trading floor. Why would you ever want to play that game of Scrabble? Because you lost so much money in a short period of time that you just had to let out frustration somewhere. It was actually a lot of fun. In hindsight, those are the most expensive keyboards I've ever traded with in my life. So don't let that happen. Set a number. Make sure it's reasonable to you. Okay, is $200 going to hurt you? Sure, no one wants to lose it. But is it going to ruin your day or your life? If it is, then make it $100 or 50 or 25. But find a number that's not going to change who you are for that day. For me, $500 is my number from a day trading perspective. I can lose $500 and be okay with that. If I lost more, let's say I lost $5,000, I'm a different person. You don't want to be around me. I'm not a good person after I lose that kind of capital. So don't let it happen. Just remove it from the equation using stop losses. All right. Let's see. I'm going to see if I get any last minute quick questions here. Otherwise, I'm actually way past my time allotment already. Sabrina, don't feel dumb. Don't feel bad about whatever it is. Let's see. You've got, Merlin, remembering that I am a newbie, scheduled for MTO first weekend in March. Cool. Still learning the lingo and not yet a trader. What is your analysis of Macy's? Do you buy or sell now? All right, I'll bring that one up here just a sec. Let me go. I was going to wrap up the show, but because you sent that question in, we will check out the old M. The symbol that was reserved for Microsoft is now Macy's. Would you buy it? Well, I mean, look at the chart here. If I'm buying something, I want to buy something that gives me a high probability that it's moving upwards. Is this, where would you, if you just glance at this, would you say this has a real strong propensity to move up? It doesn't feel that way. It doesn't really feel like there's a lot of opportunity here. So personally, I wouldn't be interested in it. It's been really flat for a long time. Yeah, it's slowly drifting up. Right now, it looks like on the short term, it's drifting down. So there's nothing here that really makes me go, I want to buy Macy's. One thing you have to understand, and this is for Sabrina and everybody out there, for the most part, you shouldn't fall in love or say, God, I love Macy's, it's great, I should buy the stock. That's a huge mistake that people make. In this case with Macy's, you should just, if you're looking to make money off of the share price of it, you should analyze where it's going, what it's doing, and that may involve some fundamental analysis as well. But right now, Macy's, I would say leave it. I don't see anything overly exciting there with the Macy's chart. All right, TJ, bring up our economic calendar. We got to start talking about tomorrow because I'm getting long-winded on today's show, and I'm sure some of you guys are going, hey, let's wrap up things. Before we get to this calendar, though, let me give you guys a little bit of heads up. I know that long and short on Macy's, yeah. Nice one, Ruben. I like that. The Britney Spears momentum train. But I'm dumb. If you guys would like to know more, I know we have some newbies out there, and we have a lot of veterans that are part of Online Trading Academy for quite some time. If you would like to learn more about Online Trading Academy, about options, about futures, about Forex, about their patented supply and demand methodology, it's all designed with the intent to really help you understand how these markets truly work. And when you understand how anything works, you can start putting those things to your advantage, whether it's long-term or short-term. If you would like to know more about the education, there are free classes, paid classes, there's community events, a ton of resources to support you in your journey. You can find out more information by clicking that link at powertradingradio.com. It says free class. It's at the top and on the right-hand side of the screen. You can click on either one of those, type in your zip code, and that will tell you which of our 48 physical brick-and-mortar schools are nearest you. Each one has free classes, paid classes, community events, like I mentioned. We actually talked to a couple guests here over the past couple weeks that are doing private little sessions for just the graduates from those local centers. So always you check with your local center as well if you're an Online Trading Academy graduate. Now we can go to our economic calendar. Actually today, in about 2 hours, New Zealand has a rate announcement. So if you're trading anything to do with the Kiwi, be careful. That could create some big moves in the New Zealand dollar. Economic announcement-wise, here's what's cooking for tomorrow, February 12th. For the U.S., you guys can see we've got the federal budget balance and crude oil inventories. When you're looking at the Euro industrial production as well as German final consumer price index numbers and the British pound, I'm not even going to say that top line because it's been there for weeks and it should just go away. CB leading index as well as the RICS housing price balance. Moving on to your earnings calendar, we have a couple big names out there for tomorrow. We have Global Payments, Walmart de Mexico, Moody's Corporation, you want to talk about ratings, Equinix, Banco Bradesco, we've got Gold, Shopify, Adidas, Chicago Mercantile Exchange, CVS, and then Cisco. A lot of people don't really think that Cisco is that important, but remember, it's one of the few components. It's a member of the NASDAQ, the S&P, and the Dow. Guest for tomorrow? I don't know. I don't know if I'm going to have a guest tomorrow. I kind of like doing these solo shows and answering your listener questions. If you want to have more engagement, you want to have your questions answered on air, do what Ullman, Heath, Sarah, and Alan did. Although, yeah, I did answer Sarah's question. You guys all sent in questions for today's show, which helps steer the discussion. I appreciate that. Hopefully, it gave you guys some nice information, market analysis. I see we've got a lot of names out there, so I want to thank all of you on our YouTube channels at Power Trading Radio as well as Online Trading Academy. Again, if you have questions, you can type them into the chat down below the box after the show. Also, if you like today's show, give us a little thumbs up. Send your questions in at powertradingradio.com and click to find out about more classes. Until then, happy trading, everybody. I'll see you tomorrow. Take care.
You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.